Bitcoin is approaching a new high, long-term holders are not selling, and the centralized exchange market is in a sharp decline. Will this bull market turn around? 3 trillion tax cuts and 5 trillion deficits. Will the big and beautiful bill cause the dollar to fall out of favor and Bitcoin to take over? Trump hoards coins to save the country, but different states in the US have different opinions. How can the dream of a national reserve of 200,000 Bitcoins continue? Countdown to delisting from HKEX. Will BSV disappear completely? Circle's stock price soared. JP Morgan Chase poured cold water on it. Don't get too excited, there are still pitfalls in the future.
On Wednesday, July 2nd, BitcoinTV English channel. Where is the coin chain? I am Michael. Let's start with the 24-hour data headlines of the Coin Circle. Introduction. On-chain data shows that the current book profit of long-term Bitcoin holders, LTH, is about 221.9%. Although it sounds fat, it is actually cooling down a lot compared to the peaks of 300% and 350% in March and December 2024. It is now almost back to the level of the correction in October last year. Although Bitcoin is still firmly above $107,000 and is about to reach a record high, LTH's profit situation is not hot. The average cost of long-term holders is around $33,400, and now the increase is about 220%. This shows that these long-term players are still sitting on the Diaoyutai and are not in a hurry to cash out collectively. The market as a whole is also rational, and there is no crazy selling wave at the peak of the bull market for the time being. However, don't take it lightly. If Bitcoin really reaches $140,000, LTH's book profit may soar to a high of 350% to 400%, and the risk of selling pressure will increase greatly. At present, LTH's profit level still has room to rise, and the market has not yet lost control. If funds on the chain continue to flow in, Bitcoin will have a chance to hit a new high. But if LTH's profit suddenly jumps to more than 300%, then you have to be careful whether the market is about to reach a stage top again. As of today, the average transfer volume of Bitcoin in the past 30 days is $58.7 billion, which is just stuck in the middle of the golden range of $40 billion to $80 billion. Historically, as long as the transfer volume reaches the upper track of $80 billion, it often appears together with the new high price, such as $272 billion in the bull market in 2021 and $80 billion when it broke through $100,000 in 2021-2024. But this time, Bitcoin is approaching $110,000, but the funds on the chain have not been expanded synchronously, indicating that this wave of growth is a bit guilty. On the other hand, when the transfer volume drops to around $40 billion, it is mostly because the market is at the bottom. For example, the bear market in 2022 dropped to $14 billion and then rebounded quickly. The current position of $58.7 billion is like being stuck in the midfield, and the market is in a wait-and-see atmosphere, similar to the consolidation period in the middle of 2021. If the transfer volume breaks through $80 billion, it may indicate a new wave of market conditions. If it falls below $40 billion, be careful of the risk of callback. At present, it is recommended to maintain a neutral to bullish stance and keep a close eye on the on-chain capital flow. After all, this is the key signal for entry and position adjustment. Recently, centralized exchanges have been in a bad situation. In June, the spot trading volume fell to $1.07 trillion, a new low in nearly 9 months. You should know that in December 2024, there was still $2.94 trillion in a single month. Now, it has fallen by nearly 64%, and the market enthusiasm has obviously cooled down. Although the price of Bitcoin was still strong in June, rushing to nearly $110,000 several times, the overall market is still conservative and the altcoins are weaker. Including Ethereum, most mainstream coins are still nearly 40% away from the high point. The market is basically supported by institutions, and retail investors have not recovered yet. The crazy energy of the bull market has not been seen. In contrast, decentralized exchanges are much more lively. After falling from the high point in January, they began to pick up in May, and in June, the volume was even larger, with the trading volume rushing to $390 billion, a new high. What's more fierce is that the proportion of decentralized exchanges in the spot trading volume of centralized exchanges has risen to 29%, and the proportion of futures has also rushed to 8%, both breaking records. This shows that the market is changing, and the leading position of centralized exchanges is being gradually eroded by decentralized exchanges. Especially as retail investors are still on the sidelines and institutions are clinging to Bitcoin, a new situation on the chain is just about to begin. Please like and follow us to sort out the latest developments in the currency circle, chain circle, and mining circle within 24 hours. Click the small bell to join the channel and become a member. You can receive the member wealth code from Monday to Friday. Recently, the American political arena has staged another super drama.
The yeas are 51, the nays are 49. The motion is agreed to. The clerk will report the bill.
Calendar number 107, H.R. 1, an act to provide for reconciliation pursuant to Title II of H.Con. Res. 14.
I call up amendment number 2360.
The clerk will report.
The senator from South Dakota, Mr. Thune, proposes an amendment numbered 2360.
Although the Big Beautiful Act claims to save money, it will add about $5 trillion to the U.S. fiscal deficit. This makes the market worry that the U.S. debt level will soar further, which may weaken the confidence in the U.S. dollar and U.S. debt. Foreign capital may continue to sell U.S. debt and invest money in Asian stocks, gold, and even in digital assets such as Bitcoin, especially now that Bitcoin is being considered for inclusion in the U.S. Strategic Reserve. In addition, the bill contains tax cuts and economic stimulus policies, which is also good news for the crypto market.
Speaking of Trump's second term, the most sensational thing is the Big and Beautiful Act, OBBBA. This thing is really full of everything. It not only contains the ambitions of the Republican Party, but also stirs up the whole United States. On the surface, this bill seems to have nothing to do with the crypto circle, but don't underestimate it. The tax cuts, money spending, confidence in the US dollar, and capital flows it carries out may all indirectly affect the crypto market, especially Bitcoin, which has almost become digital gold in the eyes of institutions in recent years. If everyone's confidence in the US dollar is shaken, Bitcoin may become a safe haven. Looking at the market dynamics again, since May, more than 100,000 Bitcoins have flowed out of exchanges such as Coinbase. The giant whales are constantly absorbing funds, which shows that everyone is still quite confident in the long-term bullishness of Bitcoin. In the final analysis, whether it is the tug-of-war between tax cuts and deficits, the hard turn of immigration policies, or the potential impact on the crypto circle, they are destined to continue to rewrite the economic and social landscape of the United States in the next few years. The game has started, and the drama is about to end. When it comes to the US Bitcoin Reserve, this matter is very lively at the federal level. In March this year, Trump waved his hand and signed an executive order saying that he would establish a strategic Bitcoin reserve. The advisors below also had their minds full of ideas, thinking about how to make the government stockpile more cryptocurrencies.
We think the number's around 200,000 Bitcoin. We think this is a very strategic asset. We think it should be held long-term for the value of the country and to maximize the value of this asset for taxpayers. We don't have a plan to buy more.
However, when the executive order on strategic Bitcoin reserves reached the states in the United States, the situation changed completely. Texas directly decided to start crypto reserves in June. New Hampshire was even earlier, approving a similar policy in May. But not everyone bought it. South Dakota, Montana, and Pennsylvania did not agree to start Bitcoin reserves. But the most ruthless state was Connecticut, which directly came up with a big move and sentenced the government to death for using cryptocurrencies so that it could not even think about it.
Connecticut Governor Ned Lamont has officially signed HB 7082, which explicitly prohibits state and local governments from accepting, holding, or investing in any virtual currency. At the same time, the bill comprehensively revises the relevant provisions on currency transmission and imposes strict requirements on digital wallets and virtual currency trading companies, including the need to apply for a license, make information public and transparent, and ensure that virtual currency reserves fully match transaction amounts.
Connecticut is determined to say goodbye to the crypto world this time. Even children are not spared. The bill stipulates that minors must get their parents' consent before using fund-sharing software. This bill will be officially implemented on October 1st, and Connecticut will become the first state in the United States to completely draw a line between the government and cryptocurrencies. Other states are busy studying how to make cryptocurrency reserves, trying to catch the express train of the times. But Connecticut has taken away its own government's surfboard. This one-size-fits-all approach is likely to miss a lot of potential wealth opportunities. Look at the federal government, which is trying to make a big strategic Bitcoin reserve, and the attitudes of the states are also a pot of stew. For example, Arizona was still hesitant, but the governor recently directly rejected the Bitcoin Reserve Bill. Next, how other states will express their opinions is still hanging in the air. This crypto drama in the United States is far from over.
With exchanges delisting and computing power lost, is BSV, the Bitcoin fork, coming to an end? Circle is striving for a banking license. USDC is going to become a national reserve.
Since 2009, Bitcoin has been arguing about how to expand capacity, speed up, and reduce fees. As a result, it has forked more than 10 times. The most famous one is BCH in 2017, which expanded the block from 1 megabyte to 8 megabytes, and BSV in 2018, which was split from BCH. Craig Wright advocated super large blocks and wanted to make it a universal ledger. After the hard fork, BSV has not had a good time.
In 2019, BSV was collectively asked out by exchanges. Binance was the first to delist it, saying that Craig Wright was too troublesome. Kraken followed closely and even held a community vote. Shapeshift was also too troublesome and directly delisted. Even Blockchain.com wallet no longer supports it. The reason is the same. Craig Wright said everywhere that he was Satoshi Nakamoto, but he had no evidence and he loved to sue, making the cryptocurrency circle a mess.
Besides, BSV itself is not doing well, and the market transaction volume is pitifully small. As of now, the market value of BSV is about $500 million, and the global market value ranking is around 105. Its technical root is often complained, and its relationship with its brothers, such as BTC and BCH, is also very strained. When the exchange sees this development prospect, how dare they keep it for a long time?
Last month, HKEX announced that it would delist all BSV trading pairs, including BSV/BTC and BSV/USDT, from 16 to 1800 hours on July 7th, and suspend deposits from June 30th, and stop withdrawals from September 30th. HKEX said that this move is aimed at optimizing user experience, eliminating inefficient assets, and reducing price volatility and compliance risks brought by BSV. Industry insiders pointed out that this move is consistent with the previous delisting actions of many exchanges, reflecting the industry's overall cautious attitude towards BSV.
BSV holders should be alert. If you have not withdrawn your orders, please complete them before 1600 hours on July 7th, otherwise the system will cancel your orders directly. If you want to withdraw your coins, you must do so before 1600 hours on September 30th. If you miss this opportunity, you will miss it. BSV has been unlucky recently. In June, Craig Wright was hit hard in the lawsuit. The court directly slapped him in the face, saying that he was not Satoshi Nakamoto, the founder of Bitcoin. Even worse, miners don't like BSV either. The computing power has gone to BTC and BCH without mercy. The community is even more chaotic. Some people want to get rid of Craig Wright and set up their own business, while others disagree and argue. To put it bluntly, the direction of BSV's project is now a mess. If BSV does not make major changes in technology, compliance, and internal management, it will be completely forgotten in the digital asset circle, and there will be no place to sit. On June 5th, Circle became popular in the US stock market as soon as it debuted. Its market value was only $8 billion. As a result, in less than a month, its stock price soared 5 times, and its market value once reached $43 billion, which was comparable to riding a rocket. However, JP Morgan Chase, the big brother of investment banks, is not so optimistic. Their latest report said that although Circle is in the limelight in the stablecoin market, there are still many reefs ahead. High regulatory costs and fierce competition, all of which cannot be avoided. So they directly gave it a sell-off rating and cut the stock price target to $80 by the end.
After the IPO boom, stablecoin issuer Circle announced that it has applied to the U.S. Office of the Comptroller of the Currency (OCC) to establish the first national digital currency bank, which focuses on providing digital asset custody and USDC reserve management and does not handle traditional deposit and loan business. Circle uses the trust bank model, which can be directly regulated by the OCC, and is exempted from applying for licenses state by state when operating across states, which improves asset transparency and reserve security and provides more protection for investors.
For investors, the biggest benefit of Circle's operation is that it will be clear at a glance whether USDC has reserves. To put it bluntly, Circle wants to turn itself into the most reliable treasury in the crypto circle. If it can really get a federal license, it will not only be able to get along in the United States, but also have more say in the international arena. Don't forget that although the U.S. Office of the Comptroller of the Currency once nodded to let Paxos set up a national trust bank in 2021, Paxos eventually failed due to various twists and turns. Circle has been playing Tai Chi with traditional finance with institutional choice in recent years. Everyone is watching what big move it wants to make this time. The current circulation of USDC is about $61.5 billion, and its market value is less than half of USDT. If the license is really obtained, USDC will be a bank-level digital dollar. At that time, institutional investors will be more at ease in the face of regulatory uncertainty, and capital inflows may be faster. It is really hard to say how stablecoins will go in the future.
Elon Musk recently criticized the Big, Beautiful Act promoted by Trump, saying bluntly, "The United States is going bankrupt," and said that if the bill is passed, he will form a new party to protest. Trump has launched a series of counterattacks, suggesting that the government contracts of Tesla and SpaceX may be canceled. CoinDesk retweeted a post by a policy advisor who calls himself Crypto Czar saying, "July is a critical month. The Genius stablecoin bill may be signed and the Clarity bill will also be submitted to the Senate." According to Bloomberg, although Singapore has introduced local regulations on unlicensed cryptocurrency exchanges, Binance still plans to maintain a remote working model. In the first half of 2025, listed companies purchased a total of 245,510 bitcoins, which is the number of ETFs purchased in the same period. More than twice the 118,424 bitcoins. According to the Hack3D report released by CertiK, the cryptocurrency industry lost more than $2.47 billion due to hacker attacks and fraud in the first half of 2025, which has exceeded the total amount for the whole year of 2024.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the Member Wealth Code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.